Thanks for stopping by. My name is Jeff, and the question still remains, do we have a recession coming in our near future? Nobody can guarantee you that answer. A lot of the buzz is still surrounding the bond market. The US 3-month bond is actually yielding higher than the 2-year and the 5-year. You know, the US 2-year bond is yielding higher than the 5-year bond, and the 10-year bond is barely yielding higher than the 3-month bond. And this is not at all how a healthy bond market should be functioning. Now, like I've mentioned in previous videos, throughout history, when the bond market inverts, it has very accurately signaled a recession somewhere between 1 year, maybe 18 months into the future. Nobody knows exactly if and when this is going to happen, and if is a very big word there. Because for all we know, guys, we might not have a recession. And it's usually triggered by a big sell-off in the bond market, which triggers a huge sell-off in the stock market, and then housing collapses and banking collapses, and everything kind of falls apart from there. So what I want to talk about in this video is, should you be selling all of your stocks and moving into a 100% cash position? We have some big things going on at the end of this week that we really need to be tuned into. I also have an experience that I want to share with you from 7 years ago when I was in this same type of predicament. And I really hope that you all can gain a little bit of perspective from some of my experiences. I want to answer the question, should you sell all your stocks and liquidate and move into a cash position? Now, that is kind of a tricky question because yes, you do want to start building your accounts up with cash on hand. However, you always want some cash on hand. And we will break that down, and I will tell you exactly how I prepare, not just for a recession, but for everyday use in my portfolio in a future video. But to answer the question, should you sell all of your stocks now and kind of wait for the recession to happen? The answer is no, absolutely not. And really, guys, you shouldn't even really stop investing. You should continue to keep investing. This experience I have takes me back 7 years to the year 2012, and it was over the summer that year that some stocks were seeing some significant growth issues. GDP growth had slowed way down, and there were some very convincing articles and some very convincing media, including this article right here, that really got me thinking, you know what, I should sell all my stocks. I even had a company 401k that I was going to liquidate, and I was going to go to a complete cash position. Now, by this time, guys, we still were not completely recovered from the 2008 crash. So to kind of anticipate the same thing to happen 4 years later, we were very, very early in the cycle. But I can remember being totally convinced and totally sold that another recession was soon to come. And I really spent like 2 to 3 weeks that summer debating, should I sell everything? And I was close to pulling the trigger. Now, I didn't end up doing that. I spent most of the year of 2012 just building my accounts with cash. I like to kind of go back and revisit some of this stuff and some of these decisions I either made or didn't make, and how it completely altered my future. Because right here, guys, where I have my marker is roughly June of 2012, and that's when I was seriously debating on selling all of my stocks and waiting in a cash position. Now, as you can see, effectively the S&P 500 and all the major indexes have doubled since 2012. So I would have just been patiently sitting there with all this money in my accounts and no recession ever happened. That's why I encourage you not to sell all your stocks, but to just make sure you are in good stocks and good positions, and you might want to start letting some of your high risk stuff go. You also might want to concentrate on being in positions you are very, very confident will survive a recession. But again, guys, if you just go out, you sell all your stocks, and you're sitting there in cash, this so-called recession might not even happen, and you're gonna feel like a tremendous fool if 5 or 10 years later, you know, we continue to run in a bull market, and like I said, waiting for something to happen that never quite does. So now this is the part where you have to do some self-evaluation. You need to look at your portfolios, your investment style, and your trading style. And you need to look, if you are very light on cash and you do not have any cash on hand, you might want to spend the remainder of 2019 building up a bigger cash position. Pretty much every portfolio has analytics. They can tell you exactly how much money you have in stocks, how much money you have in bonds, how much money you have in commodities, and how much free cash you have to spend. If you look at that and you have 0% cash, guys, it is time to start building up some cash, and you might want to sell some stocks to make some immediate cash. Maybe you have some stocks that have performed very well for you, and it's time to take some gains off the table and hold some of that money into a cash position. Most of my accounts have somewhere between a 7 and 10% cash holding, and I'm slowly building those up and investing a little less. And my goal by the summer of 2019 is to be roughly 25% cash and 75% stocks. That's going to take some self-evaluation for me, but you have to do the same. If it's time to take some profits on some stocks you've been holding for a while to create cash, I would suggest doing that, or at least thinking about it. Now we have some earnings coming at the end of this week, starting on Friday with JP Morgan Chase and Wells Fargo. You also have some smaller banks with PNC Financial and FRC, First Republic Bank. Now guys, banking earnings are very critical to tell us where our economic health is, okay? So it's very critical to know if this inverted yield curve is affecting earnings on banks, and also the fact that the Fed is keeping interest rates neutral for now. There is a couple of factors there that could affect the earnings of big banks. And also, same thing on Monday of next week, Citigroup reports earnings. And on Tuesday, it'll be Bank of America and Goldman Sachs. So Q1 earnings are kicking off. So if we see a big dramatic fall in their revenues or their EPS, guys, we could be in for a very bumpy ride. And 2019 could turn messy really fast. Again, I just want you to be aware of that. I think even if the banks do have poor earnings, it's not enough to create a recession, but you could see the market correct really hard again. If they do come in with strong earnings on slightly lowered guidance from last quarter, again, this could push the markets up, and we could possibly be taking out our all-time highs next week. And of course, I will be tuned into all these earnings. JP Morgan Chase is the bank that I own the most shares of, and I have the biggest position in. So I've been investing in JP Morgan Chase for about 6 years now, and I feel as though between JP Morgan Chase and Bank of America, Citigroup, Goldman Sachs, and Wells Fargo, we do have to see a strong group of earnings in order to push the market forward. Anyways, guys, that's all I got for the video. Make sure to drop a comment and share your thoughts with me. As always, thank you for watching the video and have a great day.